we're talking about lines of credit targeted for commercial and construction companies. That is certainly a sector and an industry that we're advocately and currently going after. So it is an industry that we like. We're doing a lot of deals amongst contractors, understanding how they operate, understanding how they generate income, their AR conversion ratio, how quickly their cash turns, what their contracts look like. These are the things that are important to the bank as they're converting to cash, how we understand that, how that impacts their business, and again, how we can put together a bank line of credit to impact that, to help that, and more importantly, to enhance that. We want to see our customers win. The success that they have means the bank succeeds. So we look at this as a holistic kind of approach. So everybody wins and everyone walks away with the right amount of credit. And we can work with you if you have new opportunities coming in, bigger contracts down the line. That's certainly something we can underwrite to, speak to as you have something coming down the pipeline. Our credit team always wants to know, what do they have coming up? What can we do to benefit them? We try not to do the deal just for today. We try to do the deal for tomorrow as well. Keep the future in mind and making sure that the credit meets the need of today, but also allows that contractor and the growth that they need to continue to find success. So the underwriting process is a quick one if we have everything in a row. What I mean by that is the financial statements need to be in order, easily kind of tracked and traced. We don't want to have our credit team work too hard, and certainly my role in this is to explain that and to provide as much detail as I can, so when they pick up the file, it makes sense to them, they green light it, and then we're heading to closing. We want to look at cash flow. We want to see some historical profits. We want to see the ability to maintain and grow these revenues. We want to understand the contracts behind these revenues. Certainly the employment, the operation, how that business is run is impactful. The history of the owners, the history of the employees, how we target and amplify the growth as they go forward. These are all important factors that we're looking for. So the collateral is going to be important, the quality of collateral, kind of understanding who your prime is, who the subprime is, where you fall in that line, where the payment types and terms are going to be in those contracts. We're going to be looking for that as well. Rule of thumb for us is we can do something pretty quick and easy when we're looking at contractors. 10% of revenues is basically what we look for. 10 to 15% if we want to push. If you have a big increase coming down the line, or you feel like you got a big contract coming, all right, let's talk about it. Let's see what that looks like. What are you going to need up front? Does it make sense to do a term loan? Does it make sense to do a line of credit? Do you need a permanent working capital injection, or is it something that you can fund and finance along the way? These are the things that we try to look for. And again, it's not a one-take approach. We're going to look at this from multiple ways to get credit done for you and to make sure that it fits the need. Last thing we want to do is put together a facility or a big term loan to which the company can't meet those needs as well as the growth expectations. That's the last thing we want to do. We want to make sure that everyone has the appropriate right amount of credit.